In this class, I am going to discuss new tax regime. It was introduced in the budget 2020. It means the applicable financial year was 2020 to 2021. Means 1st April 2020 to 31st March 2021. So, new tax regime was introduced in budget 2020. The applicable period is from 1st April 2020 to 31st March 2021. The relevant assessment year will be starting from 1st April 2021 to 31st March 2022. So, in new tax regime, we would have opted for filing income tax return in July 2021. So, whatever the money earned during this period is taxed in this period. So, while filing ATR return for that period, we would have to choose either old regime or new regime. Most of the people would have filed under old regime itself because they found the old regime was more beneficial than new regime. Let us see what is there in new regime along with the changes made in budget 2023. So now let us understand the new tax regime as introduced in budget 2020 compared with the revised new tax regime as introduced in budget 2023. In old tax regime, there was the exemption till 2,50,000 rupees. In 2020, for each slabs they have increased 2,50,000 rupees. That's made to 0 to 2,50,000 zero tax. From 2,50,000 to 5 lakh it is 5%. From 5 lakh to 7 lakh 50 it is 10%. From 7 lakh 50 to 10 lakh it is 50%. From 10 lakh to 12 lakh 50 it is 20%. From 12 lakh 50 to 15 lakh it is 25%. And anything above 15 lakh will be taxed at 30%. Revised new tax regime. So in revised new tax regime, they have kept the same 7 slabs, but they have given extra 50,000 rupees as exemption. 0 to up to 3 lakh. There is exemption. From 3 lakh to 6 lakh. It is 5%. 6 lakh to 9 lakh. It is 10%. From 9 lakh to 12 lakh. It is 15%. From 12 lakh to 15 lakh, it is 20%. What they have removed is this portion. Now we don't have any 25% slab. Instead, we have 30% slab. Anything above 15 lakh, and above is taxed at 30%. So this is the major change between revised new tax regime as introduced in budget 2020 and revised new tax regime as introduced in budget 2023. So one thing we should keep in mind is that it is not only a new tax regime 2023, it is revised new tax regime introduced in budget 2020. So now the same is revised. So let us understand what is there in the revised new tax regime 2023. So for better understanding, I am comparing old tax regime with new tax regime as introduced in 2020 along with the revised new tax regime as introduced in 2023. In old tax regime, there was something called exemptions. Exemptions means the amount earned were not included in computing your total income. To calculate tax on your income, first we need to arrive at the total income. Total income is the amount which is added combining all the source of income which you are earning in any financial year. So exemptions were not included while computing your total income, which means the total income will be reduced by such exempted amounts. Means ultimately you are going to pay less tax because of exemptions amounts were not included in computing your total income. Along with exemptions, there was something called deductions also. These deductions were usually payments or investments which you are going to invest in your life insurance or medical insurance or any fixed deposits or repayment of any loan borrowed for construction of any houses. So any such actual payments made were available for deductions from total income. For salaried class, there was something called standard deduction. For salaried class, there was a standard deduction of 50,000 rupees, whether irrespective of you have made any expenses or not. In old tax regime, you are also able to claim interest paid on loan borrowed for construction of houses. Subject to some conditions. So in old tax regime, you are also eligible for deduction of interest paid on house borrowings. So these are the major exemptions and deductions which were available in old tax regime, but they were removed in new tax regime. In new tax regime, you are not eligible to claim any exemptions, and you are also not eligible to make any deductions. And standard deduction was also removed, and you are not eligible to claim any interest on housing loan also. Then what has changed in revised new tax regime is they have kept the exemptions removed as it is, and will also not be eligible to carry any deductions. Question: the standard deduction was reintroduced. Means the exemptions were not available for claiming, deductions also not available. Instead, they have reintroduced 50,000 rupees as standard deduction. But here, in old tax regime, you were also eligible to claim PT and entertainment tax for government professionals. But the same was not given in revised new tax regime. And they were also not eligible to claim any interest paid on housing loan. And one more thing is, in old tax regime, you were able to carry forward losses from house property income. Usually a loss from house property will be incurred because of the interest portion involved in repayment of the housing loan borrowed. The same is also not available in new tax regime and revised new tax regime.